Inflation and housing remains high. Let's talk about it. Hello everybody, Joe Rorbit coming at you. And 3/4 of the way through 2023, we are still having issues with high inflation and high housing costs. Just recently, inflation rose from 2.9% to 3.18%. Now, this is significantly down from the 8 to 9% we saw about a year ago, but still not in line with the Fed's target of 2%. In fact, the Fed is predicting now not that inflation will hit 3.6% by the end of the year. They think it's going to be closer to 3.9%, which is not far off from where it is today. So what does this mean? This means that there's a great chance that at the upcoming meeting on September 20th, the Fed could announce another 0.25% rate increase, even though 90% of people out there are calling for no rate increase or they think the Fed is going to pause. This is not good news for the markets because if the Fed does raise rates, we could see an even further pullback in stock markets. The stock market was doing well up through July, but when inflation rates started to get muddled, we saw markets begin to pull back. And even though the NASDAQ was up over 40% in July and the S&P was up in the mid-20s, we've seen a 2 to 3% pullback since then because people are concerned the Fed's going to continue to raise rates, which in turn is going to cause a recession. See, the Fed also would like to see unemployment around 4.5% by the end of the year. And the good news there is it did raise from 3.5 to 3.8%, but it's still very low. We'd have to see a massive increase in unemployment for the Fed to be happy. So if inflation is at close to 4% by the end of the year, it's 100% more than what the Fed wants it to be at their 2% target. We could continue to see rate increases, which does not bode well for the housing market, which is still very high. Even though we've seen people predicting a crash is coming. Heck, this guy said that the major cities across the country would see a 40% pullback in 2023. And those cities that he said we're going to see a 40% pullback, Dallas is up, Las Vegas is only back 2%, Nashville is up. So we're seeing these housing prices stick, which is interesting because the median cost of a house today is 40% higher than it was back in 2020. However, most people are not in a hurry to sell their house or buy a new house. Why? Because 60% of current mortgage holders refinanced when rates were very low, 2 to 3%, and today they're over 7 to 8%. And they aren't going to go down until the Fed officially says, hey, we're done raising rates. So we are going to see interest rates between 7 and 8% until the Fed officially says we're done, no more rate increases. At that point, we'll see rates come back down. But that doesn't help the nearly 3.8 million people who are looking for a house or an apartment. That's our shortage right now. We are short 3.8 million dwelling units, and that is not good. That's what's keeping these prices high. People don't want to sell because they have low rates. We have a very high demand for more houses. We're at one of the lowest shortages we've ever seen in this country. So I don't see housing falling anytime soon. So if you're thinking about buying a house, I would still hold out until rates come down, which should open up the gates for more people to sell their house, which will give us a higher inventory, allow you to buy a house at a lower interest rate. However, with interest rates coming down, we could see housing prices surge. So it's sort of a double-edged sword. Do you buy it now at a higher interest rate, or do you wait when interest rates come down and you could get in trouble when housing continues to climb? The one thing I do not see a housing crash. There are too many people who need a house, and there's not enough people selling houses. Housing markets are not going to crash. So we're going to have to wait and see what does the Fed do on September 20th. We're going to have to wait and see what they do at future meetings. Until the Fed stops raising rates, mortgage rates are going to be high. The market is going to be unstable. The minute the Fed says they're done, we could see this economy pick up, and we could see a positive outlook for growth ahead. If you like videos like this, check out some of my other videos. Leave a comment down below for future video ideas. Subscribe, and I'll see you next week.